Welcome back. Now, before we take a look at the day's business news, let's first take a look at the stock indices across the GCC. And in our top business story, the American University of Sharjah's Business Forum saw a gathering of prominent business leaders share their expertise and address key business developments and growth for the region with students today. The forum was opened by the president of the American University of Sharjah, His Excellency Sheikh Sultan bin Mohammed bin Sultan Al Kazmi, the Crown Prince and Deputy Ruler of Sharjah. Leaders stated that the event demonstrates how business, industry and education can work together to fulfill the current societal and economic needs. Some of the main topics focused on business and investment, energy and the environment, innovative trends in entrepreneurship and finance, as well as social media and creative technologies, among others. Speaking on the dynamics of how communication is impacting the fast-paced corporate world, Osman Sultan, the CEO of telecom operator Du, stated that the rapid transformation of the way we communicate today is impacting everything we touch in our lives as individuals, families, communities, corporations, governments, and even nations as a whole. Students will also have the opportunity to meet over 70 regional companies at the career fair on Tuesday, as well as take in an exhibition under the title of Art Through the University and Community Dialogue. The travel and tourism industry contributed 14% to the UAE economy in 2012, well above the global trend of 9%, according to the latest report. Research released by the World Travel and Tourism Council shows that 193.6 billion dirhams worth of the UAE's GDP came from the industry in 2012 and is expected to rise by 3.2% by the end of the year. Additionally, 1 in 9 jobs in the country are a result of the industry, beating the global average of 1 in 11. The figures also show that a total of 383,500 jobs were supported by the travel and tourism industry in the UAE in 2012. And by the end of this year, the number is expected to rise by 2.6% to reach 393,500 jobs, compared with a total global expected increase of 1.7%. Nearly a quarter of the country's total investment in 2012, 82.8 billion dirhams, was directed into the industry last year, and investment is set to increase by an additional 12% this year. Apartment rentals in the Greens rose the highest last year, outperforming the likes of the Marina and downtown Dubai. That's according to Dubai Real Estate Regulatory Agency's latest rental index update for 2013. The index showed that studios for MR's The Greens jumped by 22% and are now between 45 and 55,000 dirhams per year. One beds jumped 15%, now available for 55 to 75,000 dirhams per annum, and two beds 28% at 90 to 110,000 dirhams. Dubai Marina saw rentals jump by 18% for two-bed apartments, with annual leases starting from 70,000 dirhams up to 130,000 dirhams per annum. While in downtown Dubai, the cost of leasing two beds ranges between 110 and 140,000 dirhams per year, a rise of 16%. And additionally, MR Properties' revenue from apartment sales more than doubled last year, generating a revenue of 2.5 billion dirhams from the sales, compared with 1.1 billion dirhams in 2011. News from the weekend that the Cypriot government were in talks with the Eurogroup to introduce deposit taxes on its depositors saw markets kickstart the week in the red. And with the Cyprus government going to vote today, risk sentiments were at a premium. Although the Cypriot bailout is relatively smaller, the ramifications of the move could spread throughout the rest of Europe and could possibly raise doubts on the potential future bailouts of nations such as Greece and Spain. Well, we spoke earlier to Gaurav Kashyap, the head of the DGCX desk at Alpari Middle East, to get his views on the Cypriot developments.
Markets opened the week on the back foot after a rather bizarre decision by the Eurogroup and the Cypriot government to announce deposit levies on all their bank account holders. Now, obviously, risk sentiment has been restrained. Equity markets have opened the trading session a lot lower. European equities are moving lower, and the euro has opened a whole 160 points lower against the US dollar. Now, in a very, very bizarre move, the Cypriot parliament voted on imposing deposit levies on all their bank account holders. And the reason why it's so bizarre is because this follows a similar bailout by Spain when they requested 39 billion, but they didn't face these types of deposit levies, which points to us that this could be more of a political move. Once again, Angela Merkel enters into an election year in Germany, so she's probably looking to pass the baton of these harsher rules and regulations to her Cypriot counterparts in order to keep her popularity higher. But overall, we expect risk sentiments to remain lower. Cyprus does make a small part of the Eurozone, but this will keep equity markets on guard, because if these types of deposit levies could be possible in Cyprus, could this also create bank runs in countries like Greece and Spain, which also remain to be shaky? Also looking at the week ahead, we're going to be focusing on the British pound. The pound had a stellar week last week, closing above 151. We do have the meeting minutes from the Bank of England coming up, which will be key. We will be picking out to see if they will be increasing their asset purchases. If they do, we could probably see a move towards 148 in the British pound this week.